Hey guys, welcome to Make Money Count. Very exciting news today. We got another 50 basis points off the prime rate.
I don't get, how come you don't start it by saying you were right again?
You were right again?
Yeah.
Or we were right again?
If you replay the tape,
Yeah.
last week you said, what do you think it's going to be?
Yeah. You said 50 basis points.
And you said,
I think it's 50 basis points because that's what you said. And I'm supposed to be your backup here. But I also did think it was going to be 50 basis points. Okay. Anyway, I was hoping it was going to be 50 basis points. You were right again.
Yeah. Oh my God. You know, that didn't feel as good as I thought it was going to feel.
What, you saying, me saying you're right?
Yeah. Okay. So we got 50 basis points. Next meeting is on January.
So soon.
29th.
Yeah.
No, I don't think you should wait for that one to be 50 basis points.
No.
I don't think you should wait for that one to be 50 basis points because things are going to be distorted because of this GST holiday.
Right, of course.
I don't even know that they're going to be super distorted.
Right.
So how about this? I'm 50-50 on January 29th being 50.
Right.
And I think it's important. What we should do is we should take stock right now. Like, where exactly are we at this moment? Maybe we can do some kind of cool infographic. It doesn't even have to be that cool, but just to illustrate that as it stands right now, the prime rate in Canada is going to go from 5.95 to 5.45. The overnight rate in Canada is going to go from 3.75 to 3.25. If you remember, the general consensus, what economists and the Bank of Canada have been telling us is that they want to get the overnight rate into the neutral range. That neutral range, I think, is only 50 basis points from here. So like in that, it's kind of 275 on the overnight rate. I am telling you that we are going to go to 2% on the overnight rate. I'll tell you right now. There was a Citibank economist that was cited. I know everyone's like, what does Citibank know? But they're one of the biggest banks in the world. In a Bloomberg article that echoes my sentiments. And I think you just have to consider how weak the Canadian economy is.
Right.
How fragile it is right now. I do believe that we are going to start to see normalcy creep back into the economy. This, again, is an instance of us really screwing things up from COVID.
Right.
Like our economy, if you go back to pre-COVID, things weren't great.
Mm-hmm.
Like we were kind of anticipating a correction in real estate prices before COVID.
Right, yeah.
And then COVID's free money era forced asset prices higher.
Right.
The correction that we've seen subsequently because of high interest rates has been pretty dramatic for a lot of people.
Right.
I think maybe there's a little bit more to kind of correct and balance out. Mm-hmm. But these dramatic interest rate drops are showing you that the central bank sees a real need to put a floor on where we've gotten to.
Right.
The crazy thing is that we're in advance of this, we were operating in this global consortium of G7 nations, right? We were operating under this, under the guise that we were all working together to stabilize the world's economy. Because at the time, the leader of the free world was a Democrat. And now the leader of the free world is a very different creature who will go it alone and will abandon this group think when it comes to kind of international economic policy, like being merged as one.
Yeah.
And that's going to leave members of the G7 like Canada a little bit out in the cold.
Right.
Right? Like even without a 25% tariff, it's going to be time for Canada to start working on their own we have to work on our own to make our country successful now.
Yeah. Great again? Is that what you're going to say?
Sure. I mean, what does it take, right?
Yeah.
We're going to have to stimulate business investment.
Right.
One of the reasons why we need 50 basis points and why we may need another 50 basis points in January is the lack of business investment, of CapEx that will happen from now until the time that we're confident there isn't a 25% tariff. Like the impact on business investment in Canada is going to be huge.
Right. Everyone's scared.
If you have a factory that produces widgets that get exported to the United States and that factory is in Ontario, you are not spending money to fix never mind expand, to fix machinery.
Right.
You are so worried that a 25% tariff is going to come in and just kill your business.
Right.
Until there's some certainty around that, we're not going to see business investment. Again, I'm starting to pivot into this thinking that like it can't really get much worse than where it is right now.
Right.
Because it's bad, right? Slap on top of it now, we're going to see a lack of business investment. We got a federal government that like has no fucking clue what's going on. Like you just, like you see the dialogue in Parliament. When did I ever look at this nonsense? And it's just like, they're so out of touch with the reality of what's going on. And everything is suffering. And remember we spoke about this a while ago, like, okay, interest rates come down and it's the expectation that like, oh, everything will just magically spring back to life.
Right.
Right. Well, when interest rates stay elevated for such an extended period of time and so elevated, it shows cracks in other areas of the economy, and complement those cracks now with reducing immigration, which was a key driver of growth, and complement that with the big orange man and his tariffs.
Yeah.
You're seeing unemployment go up. You're seeing these cracks happen and the fissures are becoming larger.
Right.
So listen, the other thing is like, we're very reliant on real estate. 50 basis points, great for real estate. People do come back into the marketplace. You know, things aren't going to stay depressed forever. And it's like so easy to jump on the negative bandwagon. Don't do it. Don't jump on the negative bandwagon. My mom's going to love this episode, by the way, because she always says that I shouldn't be cynical. So, mommy, this one's for you. I really believe that taking out the kind of bullshit commentary from the Minister of Finance and the Prime Minister of like the beating the Canada drum of like, are you, like if anyone criticizes their budget or their spending, are you suggesting that Canada isn't a great place to live and isn't a strong place economically? Like, that's not what I'm saying here. Canada is an incredible place to live. Canada has amazing fundamentals that it can rely on in order to help it become successful, and more competitive on the world stage. I just hate that the only thing that we got going for us right now is the ability to smash interest rates down to try to get people to buy real estate, right? We're going to have to start tapping into our natural resources. We're going to have to cut corporate tax rates. We're going to have to spend money to foster innovation. And those seeds need to be planted now in order for them to grow 3-4 years down the future. The problem is that why would a dead duck liberal government ever plant a single seed that may grow to be something successful for the Canadian economy if it was going to bear fruit in the hands of a conservative, right? Like right now, the only thing we're doing is like feeding our children sugar.
Yeah.
We're giving no vegetable. There's no vegetables in the diet.
Yeah.
The children are happy, but we know there's going to be a sugar crash coming.
Yeah.
So, like, hey, listen, all of these people calling for a cataclysmic end to real estate in Canada, stop fear mongering and stop trying to just get clicks. We are pretty close to as bad as it's going to get. Interest rates are dropping. And there's so many, like, okay, so condos. Yes, there's too many condos and the investors are gone. But there are some fundamentals that you need to look at, right? Like, okay, on the negative side, we got a whole bunch of condos coming that are going to be built.
Yeah.
We got a whole bunch of condos sitting on the market right now. And immigration is going to conceivably reduce demand.
Of course.
Investors don't want to buy them because they don't cash flow.
Right.
Okay. Investors will come back to the market if they see an opportunity for capital appreciation. There is an opportunity for capital appreciation.
Of course.
Two things highlight that more than ever for me. Number one, I was sitting here on the way here this morning, and it's like literally not 10 kilometers for me to get here from my house.
Right.
Is sitting in traffic.
Right.
I was looking around in traffic and I was like, okay, why is there so much traffic right now? I think there's so much traffic right now because all the people that like work from home like to come in now for these weeks in the office because it's kind of like half-ass working.
Right.
Like you get your Christmas lunches.
I'm working very hard, just to be clear.
You are always working hard. Okay. I'm not worried about you. I worry about people. I don't worry about you.
Yeah.
But I think that like there's an increased number of people coming into the downtown core.
Yeah.
I also think people are in for a wake-up call because all the same powers that be that gave all the free money out during COVID and told people they didn't have to work at their offices, all these massive multinationals have made a big pivot. Everyone's going back to work.
Right.
Commercial real estate's way too important. Those office buildings, they're not getting converted into residential and they're not sitting empty because they're owned by pension funds and insurance companies and banks and BlackRock and Vanguard and State Street. And guess what? Those same companies own us. So they're going to push us back into those offices.
Yeah.
Make no mistake. I saw BlackRock is losing out on, they're trying to buy a building in London that's called the Spam building or like the canned meat building or something.
Nice.
It's a really cool looking building. It's owned by another asset manager and they're arguing over price. That's being sold for 322 million. BlackRock made an offer for 322 million pounds and BlackRock offered 300 million pounds and they're not meeting yet. Right. But asset managers are buying buildings because asset managers are going to control people going back to work. Yeah. Anyways, back to my thought. I'm sitting there in traffic and I'm like, all these people are going back. They're all going back for these kind of lunches and whatever, Christmas time bullshit. They're all going back next year.
Yeah.
Next year, people are going back to the office. And when that happens, the condo prices in the city of Toronto should reflect that. Because right now, the condo prices in Mississauga are the same, if not higher, on a per square foot basis than they are in Toronto. Okay, that's not going to happen. That's not going to stay like that forever. And then the number two thing is homes, semi-detached homes and detached homes are rocketing ahead in price, right? So prices are increasing in homes, but they're not in condos. You have to think of these things as almost like tethered together. Like one can't get way too far out of whack without bringing the other one up. So like condos are what, $900 a foot right now in the city of Toronto? They ain't getting much lower than that.
No.
50 basis points off. If January brings another 50 basis points off, maybe we start cobbling together some semblance of an economy. The only problem is, remember, this is all just fucking sugar. It's all just sugar. So like and I am the sugar man. And just remember, that's an inside joke. But just remember Morgan at the gym and my kids call me the sugar man. Okay. Because in the evening when I'm watching television, I tend to enjoy a little bit of like Baskin Robbins ice cream or something. Anyways, but just let's remember that it's sugar and let's try to set our economy up for success by using this period of time where we don't have to be frantically thinking about saving ourselves because interest rates were too high and unemployment rates are driving up. And let's start laying the foundation for something amazing for the future. Because like as it stands right now, we're not doing that. Anyways, overview here. 50 basis points. We needed it. End of January, next rate cut.
50-50 on the 50.
I don't know yet.
50-50
I don't know yet. But make no mistake, like it's January 29th, March 12th, April 6th, June. Okay. So January, March, April, June, 4 before the end of the year. And we're at, what did I say? 325 right now on the overnight rate. We're at 325 right now on the overnight rate. I guarantee you that in those 4 meetings in the first 6 months of 2025, we will see the overnight rate come down by 1% at a minimum. So 4 meetings, for sure it's 100 basis points. Maybe it's 125. If things are going really badly and the orange man puts the tariffs on, it's probably 150. And that brings the overnight rate down to sub 2%, 1.75, 150 basis points. You're looking at a 395 prime rate, one below prime, 295 variable. But remember one thing, the banks are going to screw you on those variable rate mortgages. Please, please, please remember that. If you've got a mortgage right now, renegotiate it, get into a variable rate mortgage, get as much of a discount off of prime as you possibly can, because as prime drops, fixed rates will continue to come off. We're seeing bond yields drop already. Pull up the bond yield chart, put it over my face, do whatever you need to do with it. We're at like 2.8-ish on the bond yield for the 5-year, which is probably 30, 40 basis points off where we were at the highs recently. It will continue to go lower. The Canadian dollar will continue to go lower. Interest rates will continue to go lower, but the spread on that variable rate mortgage, the discount off of prime that you will get on your variable rate mortgage will continue to shrink so that your bank can make more money in net interest margins. Please, please, please heed this advice. If you're watching this video or you know anyone that has a fixed rate mortgage, get them to negotiate now.
Mic drop.
I can't say that enough.
All right, guys, you heard it here. Renegotiate your fixed rates. Do it now. 50 basis points, 50-50 on the 50. We'll see you next week. Oh, yeah, don't do it.
Don't like and subscribe.
Don't do it.
But really do it, but don't do it. Okay, bye.